Volatility is like a double-edged sword. In as much as when the market is going in your favor, you're seeing a lot of profits. If the market is going against you, you will massively see a lot of losses. And today, with the news release of the non-farm payroll, a lot of traders were trying to buy or sell in the marketplace because they knew there was going to be a lot of volatility. The people that were on the right side of the market made profit. The people that were on the wrong side blew their account eventually because the market will do its thing, and if you're on the wrong side, it's going to wipe you out. And one of the things that I talked about in my previous video, if you watched that, I talked about the key levels I'm watching on the dollar and how I wanted to see the dollar expand to the upside. And the reason how I knew this was going to happen was because I understood liquidity and also the draw on liquidity, which was to the upside. And that was the inefficiency on the monthly time frame and also a low resistance liquidity. And in this video today, I'm going to share with you my thoughts on the dollar, on the euro, key levels I'm watching, where I'm anticipating to see the market gravitate to. So stay tuned to the very end. And right here, the first thing we do, we're on the monthly time frame. And on the monthly time frame, you can actually see right here, you can see right here, the inefficiency resting right here. And if we scale down into the weekly time frame as well, you can see on the weekly time frame, we still have this inefficiency here and also the low resistance liquidity resting right here as well. And this was the last up close candle before a displacement to the downside to break below this low. And if we go to the daily time frame to see what that looks like, on the daily time frame, you can also see we have this low resistance liquidity, which is going to be my next draw on liquidity. I wouldn't be surprised to see the market expand to the upside next week to rally above this key level. And we'll also have this inefficiency here. Now, right here is our high resistance liquidity, and that is going to be the only key level that I see strong resistance levels. So if we're going to see any sort of rejection, I'm anticipating for that to happen from this key level because there's already an external run of liquidity here. So price coming in here, we could see some level of high resistance liquidity and rejection of that key level. Now, what does this mean for the foreign currencies? For example, what does this mean for euro? If we go into euro, US dollar, let me use this one right here. So if we go into euro US dollar, what this means is I'm anticipating for euro to come to the downside. And if you've missed my previous video where I talked about euro coming down, I think you should watch that. I think I've been calling euro to come down here for over 2 weeks now, but for some reason price came very close and rejected, and I still said as long as we come in here, that is the only key level I'll be interested in looking for a buy. I also shared this analysis literally 1 month or 3 weeks ago with all the people that I was mentoring, and I told them for euro, be very careful if you're buying euro where it is right now, because this low is right here, low resistance liquidity, price is going to be hunting for them. And the only key level I'll be interested in buying euro is from below this red line right here. So why below that red line? The first thing I usually do, if you draw the Fibonacci from the high, this high right here to this low right here. Now, if you draw that Fibonacci, I'll make this Fibonacci a different color. I'll make it green. Now, if I want to buy at a discount. I don't want to buy at premium. I want to buy at discount. And right here, this line right here, this green line right here, that is the equilibrium. So if I want to buy below equilibrium, which is discount. So right here, we're still at premium zone, so I'm not interested in doing anything. Price can decide to play around, do whatever it wants to do. And if it wants to continue higher from here, then awesome, that's good. And I'll just take it as a missed trade. But for me to engage and put my money on the line inside this market, I need to see price come into a discount zone. It's only at a discount zone that I'll be interested in looking for a buy. And I'm still not just going to randomly jump in because it's at discount. I'm still going to wait for confirmation. And that is using 5 minutes time frame break of structure to the upside or 15 minutes time frame break of structure to the upside. If I see any of these two, then I'll be looking for a buy to get into the market, and I'll be targeting this overall highs right here. So despite the fact that we saw a run on buy side liquidity here, if we go down into the 4-hour time frame, this right here is a low resistance liquidity. So if I'm getting into any buy from those discount zones, I'll be targeting this overall key level. So that is my analysis on euro. Overall, I still want to see euro continue higher, despite the fact that we're seeing this impulse rejection. One thing to take away from this video is whenever the euro is going to the downside, it goes to the downside aggressively. but that actually doesn't mean it's bearish, because overall, remember, 6-month time frame is still giving us the telltale sign that the structure is bullish. This is why I always start my analysis from the higher time frame. And also, my overall draw on liquidity still remains the same. This inefficiency on the 6-month time frame, that is the magnet attracting price to the upside. So after every down move and taking us into discount or extreme discount, you see eventually see price rally higher into a premium and also rally above the low resistance liquidities and previous highs. So if you found this insightful, give it a thumbs up or follow me for more. I'll see you in the next one.